Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 27th of February in London. I'm Caroline Hepker. Coming up today, Nvidia delivers results that underwhelm high expectations after years of blowouts. President Trump says the EU was created to screw the United States as he proposes 25% tariffs on the bloc. Plus, doing it for the gram, why more and more central bankers are posting on the social media site. Let's start with a roundup of our top stories. Shares in Nvidia fell in after-hours trading as the AI darling delivered good but not great results. Nvidia says that quarterly sales will be slightly above analyst estimates at about $43 billion, but gross profit margins will be tighter than expected. We got reaction from Angelo Zeno, Vice President of Equity Research at CFRA.
The gross margin number was probably the one black eye as far as where we kind of were looking at the guidance side of things. It was definitely a disappointment. I think when you kind of especially look at the trajectory of gross margins over the last couple of quarters, it kind of hit a peak run rate of about 78% in the first half of calendar 2024. So the margins continue to compress here going into the April quarter. The good news is we do expect that to essentially be the trough of the cycle here in the April quarter.
Angelo Zeno speaking there as concerns about slowing spending have continued to weigh on the artificial intelligence industry. Chinese startup DeepSeek has also sparked fears that chatbots can be developed at a cheaper rate, potentially reducing the need for Nvidia's powerful chips for AI. President Donald Trump says that tariffs on products from the European Union will be 25%. Announcing the changes during a cabinet meeting yesterday, he went on to use strong language to attack the bloc.
It was formed in order to screw the United States. I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it. And they've done a good job of it, but now I'm president.
While Trump's proposal for a 25% tariff on the EU is new, officials later clarified that all options are being considered on whether those would affect all exports from the bloc or only certain products or sectors. An EU Commission spokesperson said that the bloc would act, quote, firmly and immediately against unjustified barriers to free and fair trade. Bloomberg Economics has calculated that if the EU did face a blanket 25% US tariff, the hit to GDP could be as much as 1.5%, with Germany most badly hit. Trump's comments on the EU came as he gave a series of apparently contradictory answers about his plans for tariffs, 25% tariffs on Canada and Mexico. The US president said that he's not stopping the tariffs due to come into force on the 4th of March, but then he later mentioned the 2nd of April as the implementation date. White House officials were forced to later clarify that deadline is still next Tuesday, although Trump is still undecided on granting another extension. UK Chancellor Rachel Reeves says that the British government wants to boost trade with the US. Total trade in goods and services between the two countries was worth £294 billion in 2024. And in an exclusive interview with Bloomberg at the G20 meeting in Cape Town, Rachel Reeves made the case for even closer economic ties with the UK's biggest single country trading partner.
In terms of the future trading relationship between the UK and the US, last time that President Trump was in the White House, trade and investment between our two countries increased, and I have every confidence that that can happen again.
Chancellor Rachel Reeves speaking there as the Bank of England policymaker Swati Dhingra warned yesterday that world trade appears to be heading for an orderly fragmentation. Well, the UK Chancellor's call for closer economic ties comes just as Prime Minister Keir Starmer heads to Washington as the latest anxious ally, hoping to sway the US President's stance towards Ukraine. It's the first face-to-face meeting of the two leaders since Trump's election. Bloomberg's James Walcock reports now.
The UK has always wanted to be seen as the bridge between the US and Europe. With leaders scrambling to change Ukraine's fate, Keir Starmer is stressing that so-called special relationship.
We share fundamental values of openness, of democracy, freedom of speech, a freedom which this week we've shown our willingness to defend with the biggest sustained increase in our defence spending since the Cold War.
The UK Prime Minister faces a potentially career-defining test. Will he have any purchase on a US president who has been willing to upend transatlantic relations? Starmer's aides tell Bloomberg they would be delighted if they can get through the week without any public disagreement with Trump. In London, James Woolcock, Bloomberg Radio.
Now to another story of interest. The US Director of National Intelligence, Tulsi Gabbard, has called for an investigation into the UK, ordering Apple to give access for the global data of its customers. Gabbard said that the decision could leave American encrypted data at risk of being exposed. So far, instead of complying with the UK, Apple has removed its most advanced encrypted security features in Britain. That will potentially make it easier for the government or outside hackers to obtain UK user data. Months after Chancellor Rachel Reeves' crackdown on the UK's so-called non-dom tax regime, wealthy foreigners are making their concerns known. More now from Bloomberg's Tiwa Adebayo.
The UK government is having open conversations with wealthy overseas nationals about tax. That's according to Investment Minister Poppy Gustafsson, who says there's a collaborative dialogue between the two groups as the Treasury tries to troubleshoot issues. The news comes after a decision to scrap a preferential tax scheme which allowed foreign residents to avoid levies on UK earnings for up to 15 years, a move which provoked the ire of the ultra-rich. Now, Gustafsson says the Chancellor is trying to create a tax structure which will be viewed as fair by the general public, but prevents talented foreigners from shunning the UK. In London, Tiwa Adebayo, Bloomberg Radio.
And those are your top stories. Let's get to the markets this hour. European stock futures sinking 0.5% this morning. They dropped 1% yesterday after President Trump's threat of 25% tariffs against the EU. So interesting, the impact via stocks. The euro is also weaker this morning. In terms of the trade now, we're down 0.2%, 1.0467. US stock futures are higher for the S&P 500, up by 0.3%. We saw Nvidia shares falling 1.5% in extended trading yesterday. The stock did rise, though, before the earnings release, up 3.7%, sort of ahead of the release. Asian stocks, though, did fall because of the seen as underwhelming results from Nvidia, or not quite as amazing as people had been hoping for. So you've got the MSCI Asia Pacific Index down by 0.3%, the Hang Seng Tech Index dropping 2%. 10-year US Treasury yields yesterday dropped 4 basis points. They're up 2 basis points this morning. So we're trading at 4.27 on that 10-year yield. In a moment, we are going to bring you more details, in fact, on Nvidia's first set of earnings since the emergence of DeepSeek. But first, more on this story that caught my eye today. Recruitment firms are noticing that junior bankers are using AI to draft their resumes. But beware, if you don't properly proofread the application and errors creep in, it's raising red flags for potential investment banking employers. Of course, they are focused on, the detail that apparently you need in those junior banking jobs. Bloomberg's Georgia Hill has the story and the details on this about the proliferation of AI-assisted resumes. Her point essentially is that it is slowing the hiring process down because everybody has to actually spend more time thinking about whether the applicant is really as amazing as the AI, maybe AI assisted CV might demonstrate, which is interesting and also a bit ironic given that some recruiters are also using AI to help filter applicants. Anyway, we can all see the kind of arms race in terms of AI generated CVs and AI generated readers of CVs. But it's a really nice piece on the Bloomberg Terminal, I think, if you're out there looking for a job, one to think about. Now, Nvidia reported results which were tinged with a touch of disappointment yesterday after 2 years of blockbuster results and stratospheric stock price gains in 2023 and 2024. Joining us this morning is Bloomberg Intelligence's senior analyst Robert Lee to discuss this. Robert, great to have you with us this morning. A lot has been written on the Bloomberg Terminal, on the website, about the Nvidia results. Everybody's got a view because this company is so important. It's been the dominant seller of processors that create and run AI software. Just firstly, on the outlook for the first quarter, what have they said?
Okay, thanks very much for having me on. I guess investors have become used to, being fed a diet of continual beat and raise with the company. It's got a long track record of doing that, running over multiple quarters. So I think, first of all, the stock price reaction you saw, the rate of incremental beat and raise is diminishing. Maybe part of that reflects the higher base, but also reflects, I think, a change in narrative with investors focusing more on the potential risks that Nvidia faces in the short to medium term, and not just the positive, underlying story, which is very well known. So the Q1 guidance, to answer your question, came. There's something referred to within markets as whisper numbers. I mean, there are official consensus numbers, but there is always a view that, a company may beat or miss those. So I think there was some disappointment. There was a hope within some sections of investors that the company's revenue and gross margin guidance could come in a little bit better than it actually did. So I think that's one short-term trigger. But as I said, I think the narrative is changing. One of the major focuses on the risk front is obviously the scope for further tariffs. So obviously with a new administration in place, that remains a very real threat to them because China is still a very material part of their business.
So that just unpack, you talk about beat and raise. Explain that to the audience.
Well, I guess stock markets run on many different things, but in short term, it's all about expectations and about the incremental performance, or it's for a stock price to go up in the near term, then the guidance that a company sets and the numbers they report on their earnings date ideally would need to come ahead of what was expected. So there's an incremental positive surprise. And obviously the reverse, disappointment if, as we've seen with Nvidia on the Q4 numbers. So in absolute terms, these are still good numbers, but the actual reported numbers and more importantly, the guidance didn't quite meet the very highest of expectations. So there was incremental disappointment, even though the numbers themselves were good.
Yeah, understood. Good. In terms of the CEO, Jensen Huang, he talked about demand for Blackwell is amazing. Now, of course, there's a new model, DeepSeek. How did the CEO sort of come across, given that there is this new competitive landscape? As you say, it does look like things are quite different now for Nvidia.
Yeah, well, Jensen Huang is not just a CEO and, played an instrumental role in the humongous growth that this company has seen in recent years. He's their chief architect, their chief evangelist, their chief cheerleader. So, he's very good at setting out the stall and giving the sales pitch, which is what he continues to do. Again, I think the narrative is changing and more with a focus on the software companies and big tech platforms that are ultimately buying these chips or installing it in the data centers. A point I've tried to repeatedly make, but both in our little chats and in the published research we have in the terminal, is monetization. Because again, if we did a straw poll of listeners on this call at the moment, how many of us are actually putting our hand in our pocket and paying for these services? And if we did, probably the chances we just switch to another service, because there are many alternative suppliers at the moment. The majority of AI bots or AI tools are available for free. There is a low level of product differentiation. In many respects, or if you go back to textbook definitions, it is a commoditized sector. So again, I'm not referring to the hardware side. Obviously, Nvidia is the global leader in what they do. They're effectively a monopoly at the moment. But the monetization of the software companies, the US tech platforms are due to spend around $350 billion this year. So I would argue that the rate of monetization is not coming through anywhere fast enough to justify these very high levels of capex.
Right. Robert, thank you so much for your time this morning. This is such an interesting space. Bloomberg Intelligence's senior analyst, Robert Lee. Thank you. OK, let's dive into another interesting story. So central bankers are trying their hand at marketing and influencing on social media. This is in order to reach Gen Z and millennials in the wake of an inflation crisis in many countries, and also the surprising issue of conspiracy theories around policy making. Joining us now is our UK economy reporter, Irina Angel, who's been writing about why something like 100 central banks have actually established a presence on Instagram. Irina, it's a great story, a great tale. What are central banks doing with their Insta accounts?
Hi, Caroline. Well, they're trying to meet Gen Zs where they are, and that is on social media. So most Gen Zs get their news on social media. And central banks are trying to go there, speak in their language, so trying to keep the talk of basis points down, to regain their trust, counter misinformation, and educate. And what does that look like? Well, those videos of celebrities showing a day in their life on social media. So, for example, some central bankers are trying to do that as well. And, you can imagine with various degrees of success. And I think the Bank of Canada, its own videos are seemingly AI narrated, so they can look clumsy sometimes. And then there are all sorts of funny posts. The ECB has young people explaining its decisions, its interest rate decisions. And for Valentine's Day, they had this photo of the euro symbol made of chocolate hearts, captioned with roses are red, violets are blue, inflation's on track to settle around too. And
so it's also very cheesy then as well.
Exactly,
along with
exactly.
It all.
And a bit, poking fun at themselves as well. And I mean, maybe the most striking for me was the Bank of Jamaica. And the Bank of Jamaica has this lunchtime concerts at the central bank, these reggae concerts. And on its Instagram account, you can find videos of people in the central bank, just random people dancing to reggae music. So yeah, that was the funniest example and probably the most successful,
Yeah, absolutely. So central bankers sort of needing to reach out to the public. It is very interesting, obviously, because, they're officials with such importance, but they're not elected. So, their kind of interactions with the public, it's quite interesting. What do you think of the aim of all of this is then? And also, I guess, what does success look like? I mean, some of what you outlined, yes, is perhaps sounds a bit cheesy or not as glamorous as the successful Instagram posts that you might expect. But what is the aim?
That's a great question, and I think many people are still trying to answer the question. So the big aim is, to engage, to educate the public, because central bankers' decisions on interest rate policies, they affect everyone. We can just think of mortgage rates as the main example, but most people don't understand how it works or how it affects them. So central bankers have to be out there and they have to set the narrative, and often they have to be a bit cheesy because that's what people consume on social media, or that's what central bankers think people consume on social media. But I think there is a limit to how successful they can be. As someone put it to me, central bankers have to be on Instagram, but they won't be effective, but they still have to be there. And that's because there's this trade-off between precision and accessibility that they have. And politicians, for example, don't have this. So central bankers are technocrats. They are precise. And this is what makes them good at their job to set interest rates. But that is also what makes them a bit less accessible to the general public, a bit clumsier when trying to explain interest rates to an average person.
I also thought it was interesting that it's the central banks that you pick out as, having an Instagram feed. There aren't that many individual policymakers who do, but there is a big exception, of course, and that's the ECB's Christine Lagarde. What is she using her Instagram feed for?
Well, that's right. And, Christine Lagarde, ironically, has twice as many Instagram followers as the ECB. And, I should add that the ECB is one of the most active central banks on Instagram. So, the fact that Christine Lagarde is more successful than her own bank is quite telling. She's one of those rare central bankers that commands attention to herself. She's not camera shy. She invites the camera. So she has all these videos where she talks to the camera and she, says, I met with this friend and colleague of mine, or, I'm in Lithuania right now for X or for Y. And she, sometimes she would also post stuff like a photo of the Notre Dame after the reopening. So trying to give a bit of a glimpse into her life as well. And I think like one of the more telling examples of Christine Lagarde's sort of social media presence and relationship with the media and with the public is when she when the ECB decided to cut interest rates for the first time in the cycle last summer, and she wore a golden necklace spelling out "in charge" at the press conference when she was announcing this decision, which obviously attracted lots of cameras, and a lot of people were speaking about this afterwards. So I guess that was a successful attempt to reach the public.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.